commercial consultancy, compliance management, etc. He is known for his expertise in provide corporate commercial consultancy, compliance management services, including establishing of businesses and setups in India involving LLCs and LLPs, licensed branch offices, FDI, ODI, ECB transaction, and many more. He has been involved in many joint ventures, foreign collaborations, mergers, takeovers, registrations, and a lot of things. So I think I'd like him to take the session from here on. I hope that we all are going to learn a lot from this very session. Thank you so much, everyone. Again, let us begin with the session.
Yeah, hi everybody. Thanks Losico and Akshay for inviting me to this session and to have an interactive face-to-face with people like you so that we can share our knowledge and gain with a mutual exchange of wisdom on this topic. This is a new thing or new development which has come in and impact many of the NGOs and social activities going around us, and especially a country like India. I have made a small PPT and will share. So we'll discuss for the next 30-40 minutes on that slides what are the changes. And in case you face or have any questions relating to that particular topic or slide, you can or raise it to Akshay. We'll be happy to take it in between if it can be. Otherwise, we'll take it as at the end of the session. I'll try to share my PPT with you. Are you able to see this?
Yes.
Okay, great. Fine. So FCRA. Just a second. Yeah. So when we talk about FCRA, it's about Foreign Contribution Regulation Act. And to give you a little background, there are rules and regulations around how and from which source the money can come in and what are the regulations around it. So if you are receiving donations or foreign contributions, the Foreign Contribution Regulation Act take cares of that kind of money coming in. If it's money investment, then FDI policy, FEMA, and the Companies Act gets into picture. If you're receiving the money as loan, then the ECB regulation, external commercial borrowings regulations. The people who have attended our last session are aware of the ECB we have dealt with or discussed about. And if you are receiving against your surrendering of services or goods, then it will be covered under the foreign trade policy, FEMA regulation on exports. Specifically for Foreign Contribution Regulation Act, the nodal authority is Ministry of Home Affairs. And there is a website called FCRA Online, which comprises of all the rules, regulations, orders, circulars they have issued from time to time. So the people who want to venture into this niche area needs to regularly visit this website and make themselves versed with the provisions and the options they have. It's very user friendly, and most of the information which you can think of is available on the website of the ministry and FCRA Online. Right. Coming to the amendment, if someone wants to know, like, okay, what is the status of it? The Companies Amendment Bill to 2020 was presented on 20th September and passed in Lok Sabha on 21st of September, then in Rajya Sabha on 23rd of September, and received its president asset on 28th of September. And recently, it also notified on 29th of September to be effective from that date. To give you a background of like what FCRA and what it regulates, we need to first understand what is a foreign contribution. So the definition under FCRA says foreign contribution means the donation, delivery, or transfer made by a foreign source of any article, not being an article given to a person as gift, if the market value in India of such articles on the date of such gift is not more than 1 lakh rupee. Then any currency whether Indian or foreign, or any security as defined under Security Contract Regulation Act and includes foreign security as defined under the FEMA. But if you are receiving the money towards your goods and services, there is an exception to it that will not be treated as a foreign contribution. So the main items are article, currency, or security. If you are receiving from a foreign source, you need to be cautious whether it can form foreign contribution, and I need to take care of the Foreign Contribution Regulation Act. So as we have seen, it needs to be from foreign source. We need to understand what a foreign source is. As per the FCRA, foreign sources, any foreign government, any international agency, there are certain exemptions for bodies like UN, World Bank, IMF, which are specifically demarcated by the government as international bodies, and they fund various projects worldwide under the global treaties and the UN mandates. A foreign company, contribute a corporation or a multinational corporation is a foreign source if you are receiving money from them. An Indian company which has more than 51% or more than half, say even 50.1% of nominal share capital held by a foreign entity or a foreign government, that is also a foreign source. But there is an exception to it. Like in case investment of 50% or more than 50% of an Indian company is held by a foreign company, and that money has come in under the FEMA regulations within the limits prescribed under the FEMA, then it shall not be treated as a foreign source. Earlier there was a confusion, like in case I am receiving, or a company which is having foreign investment in India and making some contribution, whether that will also be treated as a foreign source, because otherwise in normal parlance it's a foreign source because it 100% equity is held by a foreign entity. But there is a specific exemption under the FEMA, FCRA, which exempts the foreign entities, the entities which is having foreign investment, and the investment has come in under FDI policy. Then even the trade union, foreign trust, foreign contribution, society, club, or any association of individuals formed or registered outside India, if you're receiving money from any of these, that will be treated as foreign source. And then a citizen of a foreign country. Only exemption is for NRI. NRI doesn't become a foreign source. OCI and other card holders become a foreign source. Then who can receive a foreign contribution in India? Any person is also defined, we'll take that up, can receive foreign contributions subject to following condition. It must have a definite cultural, economic, educational, religious or social program. Like your NGO or your entity or your section 25 section 8 company needs to have definite cultural, economics, educational, religious or social program for which you need to invite foreign contribution. It is required to obtain either for FCRA registration or prior permission from the central government. It must not be prohibited under the FCRA. So if you meet all of these, then you can receive foreign contributions. Then who
I
cannot receive? Sorry,
I have a question here.
do you have any questions?
If you can
Yeah,
explain the religious
please.
programs, because we can understand all the other programs, for example, economic or educational programs, but what can be the extent of religious programs?
A religious program, what the law states and what the practice FCRA follows is, like if you are putting something like preference or giving some advantages to specific kind of religion. Like if you say like, okay, I'll be opening up Christians churches, or I'll be opening up mosques and all, probably you'll not get the permission. But if you say, okay, and I'll be doing programs for religious harmony, and I'll be conducting some kind of debate programs and religious activities which will benefit economic, social people, and religious, or the people from all religions, then it will be a religious activity, because religious here means like it should be open for all. It should not be giving advantage to any particular religion or people from particular community. So it should be open for all. That is the normal parlance which FCRA takes of religious activity, right?
Thank you, sir. It answers.
Who cannot receive foreign contribution? It's like there are certain kind of people who can't receive. If a candidate of election, correspondent of any newspaper, government judge, employee of any corporation or government body, member of any legislature, political party, organization of an political nature. Actually, the background of FCRA was, it was formed at the era of an emergency. So the objective of the government is to control the influence of the foreign funding towards the news channel and the news correspondents, so that they should not be biased towards the foreign view or the public policy they want to put in place. So that's why these restrictions, and obviously it should not be to people for elections and all. Then as we have seen, either you need to take registration or prior permission. So first we'll take registration. So if you are having a registered society, trust, or section 25 company, and you are in existence for the last 3 years, and has undertaken some reasonable activity in the as mentioned in your objects for the benefit of the society, and you have spent nearly about 10 lakh rupees in the last 3 years, then you are eligible for FCRA registrations. So what if one entity is not meeting this kind of thing? Like, then you have to seek prior permission, and there is an option under the FCRA norms that the entity which has recently been formed, like either registered society, trust, or section 25 company, and they can seek specific permission of the government if they have specific ready donor. Ready donor here means an international body who is ready to give funding for a particular project of a social nature, and it requires a commitment letter from the ready donor, and the permission is given for a specific amount and an activity. All the things are specifically mentioned in the prior permission, which is the donor, what is the amount, what is the activity, and for the purpose for which the money is being spent. So this can be obtained immediately after forming a new entity if you have a ready donor. So these are two types where the you can seek registration with the FCRA. Then it's applicable to the act, or the, you can say, the jurisdiction of the act is applicable to whole of India, citizen of India residing outside India, even NRIs, though it's exempt from the definition of a foreign source. But otherwise, if they're receiving foreign contributions, they are also covered under this. Person residents in India, entities in India, even the associate company or branches or subsidiary companies of Indian companies in abroad. Like, even if I have a subsidiary outside India, that entity can also not receive any contributions or subsidies or grants from the international bodies, unless we comply with the FCRA norms, right? So now what has been changed under the new amendments, that will just take a brief glance of, which will give us an overview of what has been changed, what was earlier there. So as we have seen, there are certain persons who are prohibited to receive any foreign contributions. These includes election candidates, editor, publisher, judges, government servants. The new amendment has included the phrase public servants as defined under the IPC, Indian Penal Code. Public servants includes any person who is in service or pay of the government or remunerated by the government for the performance of any public duty. So probably the NGOs or the organizations who are receiving foreign contribution need to see whether there are public servants on their governing board, and if so, they need to probably replace them or remove them from their governing board. This is an outcome of this amendment. Then another important amendment which has brought in this is, earlier the FC can be transferred to other entities who are already registered under the FCRA or who have obtained the prior permission under FCRA. But now this amendment prohibits any kind of transfer of FC to any person, right? So and the term person includes individual, association, or registered company. So whatever the reason may be, you can't transfer any of the foreign contribution you have received. But what we have seen in the past is how this kind of an objects or projects work is, there are multiple entities who work under the funding from a foreign entity to a particular entity, and there are sub grants given to particular implementing agency in a particular area. Since this change has come in now, these entities may not be able to transfer such foreign contribution to such entities. So each entity need to obtain its own foreign FCRA registration or a prior approval, and need to monitor such kind of an funding. The objective here is to have an, you can say, transparent view, because many of the entities are transferring and there are multiple transfers from entities. So there is no check or a catch of like, and there is obviously less documents available with these entities or NGOs, because they are not that professional or that you can say pro to documentation of the transactions they are doing. So probably this is to avoid that kind of a situation, to prohibit the transfer from one NGO or one organization to another. Then Aadhaar has been made mandatory for all the office bearers, directors, or key functionary of such an organization. So, like for all prior approvals or registrations, if you are seeking renewals or prior permissions or making application for registration, now you have to submit Aadhaar number as a mandatory document for all the office bearers, directors, or key functionaries as an identification document. So key point here is probably for the NGOs or the bodies is to check whether all the key functionaries have their Aadhaar updated, so that they'll not get struck at the time of renewal or seeking application for further funding from FCRA. Then FCRA account. Earlier, the entities are allowed to open FCRA account with a scheduled bank, but as per the amendment, all the entities need to open the account within nodal branch of State Bank of India, New Delhi. Sansad Marg branch. FCRA has recently notified the branch they want to specify under this amendment. So this is a SBI Sansad Marg branch. So all the entities who are receiving foreign contribution needs to have an account with this branch. They can open multiple banks for further drawing that amount or for utilizing and keeping, but initially the fund will hit this nodal account. This is again probably from the point of view of the government wants to keep a track of what all money has come into or what all branches, because obviously the branches at the remote places won't have much knowledge of the Foreign Contribution Regulation Act. So they are not able to keep a track or keep a vigil on the compliance of the FCRA norms. So the government probably has decided to keep a nodal branch so that there is a transparency of what all money has come in as foreign contribution, since it's all coming under through a single branch. Then at the time of renewal, earlier the renewal, the entities are supposed to apply for renewal within 6 months of expiration. Now the new amendment says like the government will conduct an inquiry before giving any kind of a renewal, and they need to ensure whether the person is not fictitious or benami, not being prosecuted, convicted for creating communal tension, religious conversion, and found guilty of diversion or misutilizing of funds, among others. So this is now like for each renewal, the entity is subject to scrutiny or inquiry by the government. to check whether the money already been taken in the past is being used for what purposes. And so this will put additional scrutiny on these kind of an entities who are receiving foreign contribution. This is important. Earlier, the act says like towards administrative expenses, such NGOs can use up to 50% towards the admin expenses, 50% of the foreign contribution, and admin expenses means all salaries, rent, um, other like auditors fee and other expenses which you can think of. There are the rules specify what all is covered under the admin expenses, but yeah, in normal parlance, what all you can think of is falls within the admin expenses. Now this limit has been reduced to 20%, which is a huge reduction, but probably to curb a practice which we have seen in the past, like most of the foreign contribution received in India for a social objective went into the salaries or the payments to the consultants, advisors, and other things, rather than getting used for ultimate objective. So probably the objective behind this reduction is to cap that at 20%, so that the money actually coming in for a social cause is getting used for that purpose rather than being spent on administrative things. Then surrender of certificate or a license. So earlier there was no such provision. Now the surrender, if you don't want to carry the contribution or the foreign contribution registration or license, you can surrender it. And the government needs to do a little kind of scrutiny, like you are complying with everything else, and or you have not contravened FCRA, and the management of the foreign contribution and related assets which has been built up by the foreign contribution will vest in an authority as may be prescribed by the government. So this is like where the entities don't want to carry forward and want to surrender whatever they have done, but it will vest with the government going forward. Suspension is like earlier, the act says like the government can suspend any such FCRA registration for a period not exceeding 180 days. Now the act says like they can even extend in for an additional 180 days. So probably for a good number of days, the suspension can be enforced where the government is of a view like the entity is not complying with FCRA norms or there are some complaints against them. Then, as we have discussed, probably the key action items for the entities or the professionals who are advising such entities is first and foremost, as the recent notification of FCRAs where they have notified this nodal branch. All entities are required to open their designated FCRA account with this nodal branch on or before 31st March 2021, and failing which they'll not be able to receive any foreign contribution effective April 1, 2021. Right, so probably all such NGOs or the not for profit organizations needs to open this account as soon as they can, to enable or to keep receiving the foreign contributions. Then is to, as we have discussed, they have to check probably there is if there is any public servant in their governing board, probably to replace them, and to ensure that all office bearers, directors, key functionaries having their Aadhaar updated. They also need to ensure whether their model involved transfer of foreign contribution to another entity within India, or alternatively, if they are receiving sub grants from other entities, they need to probably make necessary alternate arrangements to so that their projects doesn't get impacted. They also need to ensure, as we have discussed, that admin expense does not exceed 20% of the total foreign contribution. To ensure that the entity comply with terms and conditions, to ensure that they'll get their renewal, because this is now made subject to scrutiny, so they need to ensure that they are complying with everything they are doing. Then on the point of like what are the opportunities or avenues for the professionals or the young professionals which want to venture into this niche area, is like they can advise the not for profit organizations on the developments and help them comply with the new requirements. They can advise and assist them forming new legal entities like trust societies, section 25, section 8 companies, to undertake social activities and invite foreign contributions and donations. And they can also assist them in documentation, processing of registration, renewal, scrutiny, prior approval applications. They can also advise and assist them in tax registrations such as 12AA and ATG. 12AA allows the entities to treat the money they are receiving as non-income. So in layman terms, they will not be the money they are receiving does not get taxed as income if they are having 12AA registration. Else, if they even if they are doing social objective and they are not registered under 12AA, the money they are receiving will be treated as their income. And registration under ATG provides the credit, or you can say the relaxation on the tax to the donor. So if your entity is registered under ATG, 50%, up to 50% of the amount they have paid as donation will be allowed to the donor as a tax deduction. The professional can also advise, assist in drafting the foreign contribution documentation. Normally, these documentation are project basis, like what all projects the Indian entity or the not for profit entity will be doing, what are its jurisdiction, what is the scope, who are the target areas, what will be the funding, how the funding will come in. It be any trigger based, or you can say performance based, or it will be time based, and how are the reportings work, how to assess the impact of the donations being done. So this is a wide area, and people are seeing it from that angle as well. Even the donors are nowadays seeking a specific scrutiny of the projects. They also want to ensure that their money which they are giving for specific social projects should not get wasted, or you can say diverted to other things. Then project monitoring, evaluation, reporting to donor entities is also like sometimes we receive queries from the foreign entities that we have given donations to so and so entity. You are supposed to do an independent scrutiny or independent monitoring or evaluation of such kind of an project, whether they are doing something on the ground level or they are just representing it to be happening that way. So that is something which the professionals can take up. Then they can also play an important role of a coordinator between the Indian entity, donor, and the Indian bank to process the FC and related compliances, because the entities who are registered under the FCRA are supposed to regularly comply and report all money they have received and for what purposes they have used. And there is an annual return, and if there are any changes to the signatories and all, they are supposed to intimate. So that is the area where the professionals are highly required, and people love to take their services. And last is like the to capture the regular and event based compliances of FCRA norms as and when they are called off. But the big entities or the entities who are regularly receiving such now have built up the in-house capabilities, but definitely they require assistance from the consultants, because this is a complex area and they need advisory on why and how to comply with the FCRA norms. I think that is a short snapshot of what we are come up with these amendments. I'll be happy to take any questions you have. I think we have well covered it within an half an hour. So I'll be happy to take questions if you have. I think we have any questions.
We do have questions. We'll start with the questions. So we have good amount of time as well, so we can go from them one by one.
Sure.
Before starting with question, I would like to tell the all the participants that LawSeco is coming up with a course with respect to FEMA, FDI, and FCRA. It is going to be a 2 months course and it would be a certificate course. I have provided the number. You can reach out to that number and find out more about this course. So that was that. So I think we can start with few questions we have received, and if there are no more questions, I'll point out my own questions. So first question is, what is a Section 25 company?
Okay. Section 25 company or Section 8 company, which were earlier in 1956 Act. In the Companies Act, if you're opening a company whose main objective is not for profit, or similar parlance is like if you are forming a society or a trust, in Companies Act, it's a Section 25 company, we normally call it, and the Ministry of Corporate Affairs gives it a license to operate as a not-for-profit company. So Section 25 company is a not-for-profit company. Basic background of it is like the trust and societies are very easy and to close, and company is not as easy to close. So foreign entities, while putting or giving some funding to entities, want to ensure that they fund to a legal entity which is viable for a long term, because obviously people have seen frauds and you can say people siphoning off funds in the past, and they are very easy to just run away overnight. And company structure is not like that, so you need a proper process to close it down. So foreign entities, while donating, require some kind of an KYC or due diligence of the entities, and Section 25 company or a not for profit company registered under the Companies Act is some is an preferred entity for such foreign donors.
Right, right. So moving on to the next question. If a company receives ECB and give it as a loan to company B, whether FCRA would be applicable?
ECB, you are saying?
Yes, if company A receives ECB and give it as a loan to company B, whether it would be FCRA.
So first of all, ECB is external commercial borrowings, and it's you can say it's coming in India is regulated by the ECB policy, and it also has some end use restrictions. While giving loan, further funding is only allowed to the NBFC entities and also for a particular purposes. So first of all, ECB money can't be donated as such, and that so you are you can say taking a problem with two authorities at the same time, like RBI and FCRA. So it's not advisable at all.
Right, right. Uh, we have another question. Do Section 8 companies still have to wait for 3 years to get FCRA license? Does the amendment deal with this issue of waiting?
No, the amendment does not deal with the issue of waiting. They still have to, as we have mentioned, as we have discussed. There are two modes: either registration or prior permission. If you are going for prior permission, the condition of 3 years waiting is not applicable. But if you are an existing entity or a Section 8 company having a 3 years track record, you have to go for registration, right? If you don't have that 3 years condition or track record, you can go for prior approval. But trust me, prior approval is also subject to an extensive scrutiny. The MHA officials normally visit your site or the place. They also do independent KYC of all the key you can say signatories. And even if it involves a foreign party or a foreign contribution, obviously, because if you are going for a prior permission, you need to have a ready donor. So they even do a scrutiny of the funder or a donor in that case, and an independent application goes to the embassy of that country where that entity belongs to. And if it's from any of the countries who are in negative list, your application goes for a soup. So it's advisable to have an advisors in before to check whether your application will go under prior permission or not, based on the experience or based on the unstated law as such, because there are certain countries which are not mentioned in the policy, but as we know, there are, like for example, China, Hong Kong, Macau is the countries are something on the negative list internally with the regulator. So they goes for an extensive scrutiny by the MHA, by the corresponding embassy of the home country of that foreign donor.
So I have a follow-up question. Can a lawyer figure out about these internal policies? What could be a way of figuring this out in terms of if a lawyer is advising a client in sourcing a contribution, let's say?
I didn't get the question, sorry.
Can a lawyer find out about such policies which are not there on this is something which might not be there in public domain, that certain companies are in negative list. How can a lawyer find out about this?
You're talking about like foreign donor, like whether they are in negative list or not, or
The
what I have
countries.
discussed, like okay, there are certain countries which are in negative list, right?
Right, the
So this
countries.
negative list is, if you have heard of FATCA compliances, and there are international bodies who gives a ranking to each country or each jurisdiction, whether it is safe or not, and sometimes it's internal instructions to the regulatory department. Like for example, if you can sense like there is an instruction being issued to government bodies or departments, something to do with China, right?
Hmm.
So if your money, or if the party is from China, Hong Kong, Macau, you are definitely subject to specific scrutiny. And Pakistan, Bangladesh, Nepal is also in that list. So you can sense from the entity, or probably you can take advice from the consultants who are daily in dealing with the officers on that subject. So they generally share like, okay, this is something internally they have received, and somehow when you practice in this area, you come to know like, okay, these areas, these entities, or these type of jurisdictions have problems, because these are worldwide treated as not safe countries for the funding, and being used in the past for terror funding, religious conversions, and other things else. So that is something which the government is looking at very specifically, like where the what is the, even in the companies normally, if you talk about, if it, even if we don't talk about the FCRA, even for the investment which is coming in under the FDI route, a specific KYC is being included. And nowadays banks also do extensive KYC of the ultimate beneficial owner on the entities one and above. Even the Companies Act has also included, so companies are supposed to disclose who are the ultimate beneficial owners behind the shares they are owning. So worldwide, this practice has now started, and it's coming from the international, you can say, the treaties we have signed. So the requirement is to ultimately identify who are the ultimately funders behind the organizations or the business. So to check like it's coming from a legitimate source, and it should not be used as an, you can say, camouflage to achieve something else.
Right. Moving to the next question. If retired public servants are on the board of a FC recipient as a consultant, would that amount to violation?
No, that will not, because it says the public servants as on the date. So retired people, but there is a catch, because normally these consultants charge a consultancy fee, which was subject to administrative fee, administrative expense, and that has now been capped to 20%. So ultimately, their pay packages will get, you can say, capped at that. So to answer, yes, they'll not be subject to violation, but obviously their paychecks would get a hit.
Right, right. Next question is, do salaries of teachers of an NGO whose main activity is to provide education and training to a particular segment of the society would come within the scope of Administrative expenses.
Salaries of teachers of an NGO whose main activity is to provide education and training to particular segment. Hmm. Actually, we have to see salaries of the teachers of an NGO. So I'm assuming these teachers on the payroll of an NGO, right? So what happens normally is like sometimes NGO themselves does these kind of social projects, and sometimes they identify an implementing agency, right?
Hmm.
But in this case, since this is part of the NGO, this can be built up as an cost towards the project rather than administrative expense. But the people who are taking care of the NGO as such, like probably their employees, their accountants, their other admin staff would fall for administrative expenses. There needs to be a working around it. Need to be seen like how it's reported in the books of accounts and etc. of the NGO, right? On the face of
Right.
it, it doesn't form part of the administrative expenses and form part of the expense for the project.
Right. So the next question is, do NGOs that are not under Section 8 have to give up their FCRA license, or will they be examined again?
No. So there are three types of entities. You can be either registered trust, you can be either registered society, or you can be a Section 8 company. All these kind of an NGOs are allowed to receive FCRA. Do NGOs that are not under action? No. So it's not specific to Section 8. You can be any of the three entities. Like for example, if you have a registered trust and registered under FCRA, you are fine to go.
Right. Moving on to the next. The term government servants was already there prior to amendment. So what could be the probable reason for of including the term public servant in the new amendment?
I think the main reason is a fine print between the government servant and public servant under the IPC, Indian Penal Code. So there is a history around it. So there are some organizations which has some public servants as their key officers and employees, and they have received some foreign contributions and in the past. So this amendment is actually resultant out of that development. As such, government servants and public servants has a very fine difference under the definition. So this public servant phrase is used under the IPC. That's why it's had been brought in here, just as an addition to government servant, if there is, to avoid any confusion.
Right. Right. So until I see your next question, I'll put up my own question here. As we went through the requirement of registering for FCRA, so it or where you can accept the FCRA. So you either have to be like be engaged in economic or social or religious or such activities. So here there is this word economic activities. So can you explain what does this exactly includes, and can it be used to uh, you know uh, include the corporate fundings to its own subsidiaries which are in India?
Subsidiaries. First of all, I'll take your first question first. Economic activities or economic projects program means like you are carrying out some development program, right? And or probably some project will you will give some funds to the people who will contribute towards that. Probably you are forming, say, a dam, or some kind of an education program or a skill development program are normally covered under this economic programs, right? So this is something to do with that. Second is whether companies can fund their own projects is something a different thing, because there are different structure around it. Like for example, one is like if you are funding it as CSR, like it's if it's an obligation of an Indian entity as CSR, it will be altogether different. It can't receive foreign funding for that. Or even if it does, there are other modes of funding it too, like as share capital or as a loan to an Indian entity, and they can use that funds to carry out these projects. right? So subsidiary, I think, to answer your question, there are different modes and structures to do that. Why to get it into FCRA structure? Because this act is, the notion is, it's most of the stringent laws India has. So why to get caught under this rather than doing different structures for these kind of projects as CSR projects, which is much seems to be more generous legislation.
Right, right. So, going through this, there is this another thing I wanted if you can explain about the registration process, the procedure that is involved.
Okay, let's go to registration. So, like for example, first registration, you need to do a homework, like whether you meet these conditions or not, whether you are registered trust, society, or a Section 25 company. You meet these conditions of existence of 3 years. You have undertaken some kind of an activity, and there is a minimum threshold of 10 years. Then then you need to make an online application to FCRA. Nowadays it's online, and it also requires you to submit some papers physically, and the ministry takes its own time to examine that. Probably sometimes they generally send a kind of an questionnaire asking different things again, and you are supposed to answer them. Once that is done, their official comes for scrutiny for all the key officials, for the company registered office address, and the object or the project which you have mentioned in your application that you have done in the past. So they do a ground level scrutiny of all these things and submit a report to MHA. That is all internal. You'll be only approached by MHA officials when they come for scrutiny. Like if you are a key signatory to the whole application, or a key functionary in the society, trust, or company, they will approach you and ask you about your KYC documents like ID, address proof, your income tax returns, and all the things, like where you stay. And they also check about neighborhood, about the activities the entity is doing, and the person is of what credibility. So that is they do, based on that report internally, they make their mind, and accordingly they issue a registration certificate to an organization. That is a small process they have, though it sounds small, but yes. Authority takes its own sweet time to do a KYC. And if you have any connection or a foreign person involved, first of all, now normally a notion is like, if there is a foreign signatory, or a foreign person who is wants to be part of your organization, it's recommended not to include it in the initial phases, because that scrutiny takes a lot of time, because MHA, similar to ground level scrutiny of the officers, they send it to the relevant embassy overseas. And generally they don't have a context of like why they that scrutiny is that's take more than normal time. So that can be included later on, which can take its own sweet time and doesn't impact the creation or the establishment of an entity as such.
Right, right. Uh, there was this another question. So there was this NGO which got recently which closed its offices in India. So when it comes to enforcement, once the registration is done, what kind of investigation does government keeps on how does government keeps check on the funds being issued, and can FCRA be issued as a legislation through which some NGO can be closed down, shut down, or is there any such enforcement mechanism?
Yes, of course. Say once you have received the FCR registration, you will start receiving the foreign contribution, right? Then on monthly basis, or every time you receive a foreign contribution, you are supposed to report it to the nodal bank. Then banks are also under obligation to report that to RBI and MHA respectively, like such and such money has been received as a contribution for this project. So there is an continuous scrutiny. So wherever they found some kind of an complaints, probably by the authority, or they themselves monitor some misreporting is happening, they start scrutiny and they stop or put you under suspension for some period of time till the scrutiny get over. So in scrutiny, if they found something is wrong, or you are not complying with something, or you are misutilizing the funds, or the money is being utilized for the purpose or objective which are not falling within the category which we have seen, like you are involved into religious conversions, or you are involved into any terror funding, or the money is being siphoned off for something else on the verge of or on the camouflage of social activity, then obviously that section, that entity get banned for life or for a certain period of time as the government may deem fit. So that is the prerogative and of the FCRA. And you further, if you see, like for example, in this, like you must not be prohibited under FCRA. So if you once got prohibited, it's for life. So once prohibited, you'll not be able to take any such further permission. And this government system is also internally linked. So it also got reported to RBI as well as to income tax department. So the person, and similarly to Companies Act. So at all the places you'll get triggered like this person is prohibited under the. So say for example, if you form a company, you submit a declaration whether you are defaulted under any of the legislation of country. So if you does, like, you are misrepresenting.
Right, right. So I'll take one last question for this session. So in case an entity has been found, government has found that this entity is not doing it rightly. So let's say the bank accounts are freezed by the government or some action is taken against the entity. Now, what is the remedy which can be available to this entity? Can this be challenged in a high court or a Supreme Court?
So how does it happen normally is, before doing that, the ministry issues a show cause notice to any entity, like, okay, this is the complaint received and we want to inspect your documents. And they fix up a meeting where you are supposed to take all the documents, as similar to income tax, you can say, investigation or any other government department investigation. And if you are able to make them satisfy with their questions and everything else, you are fine. If you are not, then you are given another chance to submit supplementary documents within a given period. If you're not, then the suspension comes in. So it's not like on the first verge they'll suspend you. So it's on unsuccessful attempt to make government satisfy their requirement. So that is the thing.
Right. So even if some process is not followed or notice is not served properly or something like that, can we approach it for violation of natural justice principle to a high court, or is it something?
Of course, that can be done, but obviously, since it's a government department, doesn't happen generally that way, because obviously no person has its personal grudge against any of the entity, because they also have their internal protocol to be followed, and it also they have a layer of authorization before sending anything, similar to income tax department. There's a ground level scrutiny officer, and then assessing officer, and then senior inspector. So similarly in MHA also, they obviously they doesn't disclose this in public domain who is what is the hierarchy and all, but they do that because obviously if you try to even go and meet them, you will not be able to, because they keep it totally secret, like who is working under what. And even the scrutiny is also without a face. So that is something which they follow. So I doubt like that happens. But yes, if you feel like that, like you have not been given an opportunity, or probably notice has been served where the address has been changed, for example, that could be a reason. But obviously department will say when they have proofs to prove, okay, the documents have been you can say submitted or sent with due notice.
Right. So this is something which can be challenged in a court if it comes to that, and it's not
Of
something which
course,
should
of
be
course,
hid behind.
that is my legal right. In case I feel like that way, I can definitely go to high court to. And even that doesn't, that is only on a ground of like I haven't received a notice. So okay, the court will say, okay, you will receive a notice, and you then you'll also involving one another authority.
Hmm.
right? You have to submit everything before the court, and they also have to submit all or everything before the court. So that is something you have to take a commercial call, like whether you want to get involved another authority on the whole issue.
Right, right. So this was it for today's session. Thank you so much, sir, for taking out time and being with us for this wonderful webinar. I am sure that all the participants are going away with a lot of things today. So thank you very much. I would hope that we continue to do this with Lawsico.
Sure, sure.
And thank you
So
everyone for joining in.
yeah, in case you have any further questions, you can write to me or call me. I'll be available, and I thank Lawsico for giving a platform and an opportunity to interact with you all people, and it's like knowledge gaining for me as well while answering your queries, and I also have to get back to it and check and a certain point. So it's good exercise, and we should regularly do this to enhance and upgrade our knowledge base. Thanks again to all of you.